wanted to pose some typical questions for you to consider in your normal course of a divorce case. Some of them are, if a client has a home, how are you representing them and how are you determining the value of that real property? How would you handle it if one spouse wants to keep the house, can't refinance for whatever reason, but the other spouse wants to buy a new home? The biggest argument is, I can't if I'm tied to the marital mortgage. How would you handle it if spousal support is going to be based off of the other party's fluctuating income? Maybe they get quarterly bonuses. Maybe they're commissioned. How do you calculate that? How would you handle spousal support versus a lump sum payout? So there's a lot of questions in here, and the answers, believe it or not, to these questions may have significant consequences on obtaining mortgage approval. Every member of the professional divorce team, every one of us who are involved, we have a different perspective and approach to answering these simple questions. And it's only by us working together are we going to share those perspectives and actually be able to, again, devise, some solutions and strategies. These are a couple more complicated yet common situations, I believe, when you need the perspective of a CDLP to help implement an executable solution. When a property settlement note's put into place to distribute ownership, a family business, how does that impact mortgage financing? When there's equalization payments used rather than spousal support, when one spouse needs income to qualify for a mortgage but doesn't meet the guidelines, how can you use marital assets or financial and tax planning with the CDLP to actually create qualifying income for mortgage financing? So these are questions and common situations that, in my opinion, the majority of family law professionals, they don't take into consideration. They understand what the end game is, if you will, what the desired outcome is of both divorcing spouses. And they put together the settlement agreement, not fully understanding whether or not they can execute it on obtaining mortgage financing. And then all of a sudden, things get back into court, everybody's upset and they're trying to figure out exactly what they can do. One of the things that I think is a great visual is understanding that every divorcing homeowner goes on their own unique journey. Their end game is different than anybody else's. And sometimes that end game actually looks completely different for both spouses. And I would say that the traditional journey begins with, what are we going to do with the marital home? Should one spouse keep it? Should we sell the home? What about the kids? And then there's the financial aspect of it. Can I even afford, to keep the home with only one income now? And obviously, then once the decision is made as to what they're going to do with the marital home or what one person wants versus the other, that's when the negotiations start. The settlement agreement then outlines whatever their settlement is. And traditionally, how this journey happens is they go through negotiation, they come to a settlement, and then they're suggested, hey, go out, find a mortgage professional, they'll help you execute this. Well, the problem is that divorce mortgage planning should not come at the end. It should actually start being integrated during the negotiation process, because it's only when we're involved during the actual discussions and at the conference table can we start to identify a lot of these conflicts, the hurdles, and how we can provide, solutions and strategies, et cetera. And this is actually where, divorce mortgage planning and a certified divorce lending professional fits in perfectly with the amicable divorce process. We all want to create an outcome where both spouses can find a sense of peace and closure. And when we can remove the conflict, that's going to come around the house, because a lot of people look at the house as a business transaction. It's much more than that, and if we're in their shoes, it's almost, in my opinion, sometimes a slap in the face to say it's just, look at it as a business decision. Yeah, it's financial, but we sometimes disconnect from the emotional ties that are involved with that property. So I think if we all, again, just work together, it's going to be, such an easier, smoother process for the divorcing homeowners. We've actually been using the term divorce mortgage planning since the CDLP certification began a decade ago. And still, almost 10 years later, that concept, it's still somewhat vague or even new to some family law professionals. So I wanted to quickly try to define it for you if I can. So we're all familiar with estate planning, right? Putting together our wills and a variety of other matters to handle upon our death. Financial planning. It's another familiar term involving clients' overall financial picture, identifying strategies for their goals, financial investments, etc. And then, in a divorce setting, we obviously have the very valuable player, the divorce financial planners. They're specifically focused on the personal and business financial strategies involved in divorce settlements. Understanding, the concept of those other professionals, I think leads into a little better understanding of what divorce mortgage planning is. And in my definition of divorce mortgage planning, it's recognizing that, desired end game of each divorcing homeowner, identifying the needs and options available for mortgage financing, and then having that ability to incorporate those necessary details and clarity into an executable settlement agreement. Let me be very clear, though, even though I constantly say, that the CDLPs have, a ton of background knowledge of matters with family law and real property, financial and tax planning and real property, divorce and mortgage financing. The CDLP is there to support the legal and financial team as well as the divorcing homeowners. The CDLP never gives legal or tax advice, ever. One of the most common questions I get from loan officers is, why do I need specialized training to work with divorcing homeowners? I can read mortgage underwriting guideline. I know everything I need to know. What that mortgage professional is actually telling you is that they don't know divorce. That's what they're telling you. If they say, I don't need training in divorce, I know the mortgage, they're telling you flat out, they don't know divorce. A CDLP offers a very unique perspective other mortgage professionals just don't have. I love that saying that's on this slide. It's not what you look at that matters. It's what you see, right? And we want to be part of that solution. Perspective is a powerful thing. And when you can look at a divorce case with a broader vision and learn to work with the professional and divorce team during the process, not after, you learn to identify strategies. You learn to help, make, again, that end game an actual reality for someone involved. And I see daily mortgage professionals who think that the ability to work with divorcing homeowners is simply having the mortgage knowledge. They don't understand just this requirement of understanding what they do as a mortgage professional, how it can negatively impact financial and tax planning that was set up in the divorce. They don't understand this huge crossover between family law and divorce. So basically, who you work with really does matter. And you can bring value or you can bring chaos. This image I love to use because I think, again, it's a great visual. And this image shows just how intersected these specific 4 pieces of the divorce puzzle are: family law, financial and tax planning, real property, and mortgage financing. All of these pieces of the puzzle, they just converge with each other, especially when the home is right in the middle, right? And this example, it only takes into consideration a fraction of possible overlaps, yet it really amplifies, again, the need for a very knowledgeable and strong professional divorce team. There may be capital gains involved, especially in today's real estate market. Support income, it directly affects mortgage planning. There may be the need to look at and protect the mortgage interest deduction, believe it or not. Property disposition. It's not as simple as who gets the house and who moves out. Are we looking at an equity buyout? Are we trying to position both spouses to purchase new homes? So again, when the home is involved, a CDLP has that wider perspective and vision to see these overlaps. And then heck, you layer on the military divorce. You can see where these areas even become more overlapped. And what about, divorcing seniors? They have their own special considerations, that we need to look at. A lot of them are retired. A lot of them, like Tracy and Ann and I were just talking about, they haven't worked for 30 years. How are they going to refinance the mortgage? What are our options, for making sure that our divorcing seniors, their standard of living doesn't significantly change? How can we all come together and help all divorcing homeowners be in a better position post-divorce? As you guys can imagine, it's pretty challenging to lay out a definite example and definition and description of divorce mortgage planning because it can affect so many areas of the settlement. So I thought to help explain it a little more, I give you just a couple common examples of how the divorce settlement itself actually conflicts with mortgage financing and how divorce mortgage planning is a little different animal, okay? This is a common example of good intentions gone bad without, kind of really reading it because it's pretty lengthy. Basically, it was a synopsis of an actual divorce settlement agreement that I took out when this is how they addressed, the marital home and the equity buyout. But what they did here is they tied in debt payoff into the equity buyout. And what that does is it actually limits the dollar amount you can borrow against the house. In this case, the husband, he was only going to be able to access 80% of the value of the home. And let's say maybe the home was valued at $700,000. There's an existing mortgage of $500,000. At 80% loan to value, he's only going to be able to access 60% of that $100,000 he needs to pay the wife. So she's going to be 40 grand short. Looking at this, and again, we see this as a common settlement agreement. Sometimes the real issue isn't so much of what you see that's wrong with this picture. It's more about what you don't see. And that's where the CDLP can come in very, very handy. First, in this little snippet, there's no real set time for the refinance, right? It says as soon as possible. That's fine. What if it's 6 to 9 months? What if it's a year? It doesn't address either how title is currently held. It doesn't address the consequences if joint tenancy is severed by divorce. It doesn't address any existing property or tax liability. It doesn't address the existing escrow account, which can be thousands of dollars. Even though it might be understood that the husband is going to be responsible for paying the existing mortgage payment until he refinances, it doesn't say that. So what if the wife wants to qualify for mortgage financing on her own to purchase a house? She's going to have to count this mortgage debt against her as well, even though he's paying it. There's a ton of many more rabbit holes than I even mentioned that this one example ties directly into mortgage. But looking at it, you would just think it's the husband's getting the house. He has to pay her 100 grand. And once she receives it, she's supposed to pay off this debt. They understand it, but what the attorneys who drew this up, they don't understand the implications that are now laid out there. The risks that are sitting there, just waiting to happen. I mean, the title, okay, some of you might be thinking, well, joint tenancy is severed by divorce. What happens? It defaults to tenancy in common with no right of survivorship. So what happens if the husband, for example, passes away? The wife isn't automatically going to get the house. His portion may go into probate while she owns the other half. What happens if in the meantime he got remarried and left his new estate to his new wife? Who owns the house together? Both wives? There's a lot of things that can come into play. And again, it's that broader, vision.